Program is brought to you by Real Estimate, Australia's #1 property value estimate. Get your real estimate today on realestate.com.au.
Welcome back. We've got another busy week of auctions this week. Nationally, 2,752 homes are scheduled to be auctioned, and that's up 12% when compared to the same week last year. New South Wales will host 1,044 auctions this week, with most of them in Sydney. Victoria will hold 1,173 auctions, with virtually all of them in Melbourne. Queensland will host 243 auctions, with 135 of them in Brisbane. South Australia will hold 161 auctions, with most of them in Adelaide. Western Australia, Tasmania and the Northern Territory will hold 31 auctions between them, and the ACT will hold 100 auctions. Take a look at the most viewed properties going to auction this weekend, and in New South Wales, the top property is 58A Burgess Street, Beverley Park. This four-bedder has 3 bathrooms, space for 4 vehicles and backs onto a golf course. The top property in Victoria is 31 Charming Street, Hampton East. This modernised California bungalow has 4 bedrooms and sits on about 780 square metres. Asking price is about $1.9 million. Top property in Queensland is a resort-style home located at 5 Musgrave Drive, Yandina Creek. This massive property sits on 4,000 square metres, has 7 bedrooms and forest views. Top property in South Australia is 7 Dennis Court, Clarence Gardens. This 4-bedder sits on 600 square metres, has a price guide of about $745,000. And the top property in Canberra is 42 Cowper Street, Ainslie. This 4-bedder is close to the central suburbs of Braddon. And the most viewed property on the REA Group website this week is 382 Victoria Parade South, Mudlow Island in Queensland. It's a small island just off the coast from Brisbane's southeast suburbs. This home is being offered to the market for the first time, and it's taking offers of over $500,000. It's pretty simple 2-bedroom cottage, just 15 minutes from the mainland via ferry or barge. The island has a golf course, beach, restaurant, general store, and BMX bike track. The home also comes with a couple of sheds for storage. The house is about 100 metres walk from the beach and a couple of 100 metres to the boat ramp. For more on the property market, I caught up with Angus Moore from REA Group a little bit earlier.
Yeah, it was pretty quiet last weekend with the Melbourne Cup. We saw pretty light volumes in Melbourne, as you'd kind of expect, probably a lot of people taking the 4-day weekend. Mm-hmm. This weekend, though, we're back in the swing of things. Things look pretty solid. To put it in some context, we're seeing volumes up about 20% or even a little bit more in Sydney and Melbourne compared to the same time last year. So it's a pretty solid bounce. Now, last spring was pretty quiet, so it's a little bit of an unfair comparison, but we are, broadly speaking, seeing pretty solid conditions this month as we have kind of throughout spring so far.
And how have clearance rates been holding up the past few weeks?
They've been pretty solid, even in spite of the fact that we've seen a bit more volume coming to market. They haven't been maybe as strong in the last couple of weeks in Sydney and Melbourne as we were seeing earlier in spring, though last weekend's a bit hard to get a read on, given it was a bit of a lighter and disrupted weekend. But broadly speaking, they've been pretty good, sitting around the low 60s in both Sydney and Melbourne, which is pretty good given where we're at.
Property prices, they hit a fresh peak in the month of October, so I guess that's giving sellers quite a bit of confidence right now as well.
Yeah, I think that's been the big change we've seen this year compared to what we were seeing last spring. Obviously last spring, interest rates were rising very quickly, prices were falling pretty quickly. This year it's a very different story, maybe this month aside on the interest rate front, but we are seeing prices pick up, and Sydney and nationally are now both back above where they were before the RBA started raising rates, which is pretty remarkably resilient recovery, and that's probably giving sellers a bit more confidence in going into spring.
Let's talk about rental vacancies, because we've got a few charts we can get through, basically just showing how rental vacancies in Australia are record lows right now.
Yeah, we had data out today on rental vacancy rates, and as I feel like I say a bit, it's not great news for renters, unfortunately. We saw rental vacancy rates go lower again in the month, and they're now sitting at just 1% nationally, which is basically as low as we've seen. To kind of put that in some context, which the chart will show does. Pre-pandemic, it was more typical to see sort of 2.5%. And we'd consider sort of anything between 2 and 3% nationally to be kind of broadly balanced. Anything under 2 is pretty tight. At 1%, we're talking just very, very difficult conditions for renters nationally.
1% across the country. And I think we've got another chart showing the different capital cities. And what's jumped out at me was rental vacancy rates in Melbourne were pretty high, around the 5% mark a couple of years ago, but now they've just come straight back down to earth.
Yeah, I mean, I think what we can see across the country at the moment is rental markets are very tight, and that's a very different story from what we were seeing in 2020 and even into 2021 in Sydney and Melbourne specifically. Both Sydney and Melbourne actually saw rental markets pretty soft through the first part of the pandemic. Melbourne especially. The stat I like to roll out is rents in inner city Melbourne fell by as much as a quarter into 2021, which huge falls. And that was coupled with very high vacancy rates, as you can see on the chart, and that's why we saw those rent falls. That's obviously now completely changed. Both Sydney and Melbourne are now sitting at 1.1%, incredibly tight. The smaller capitals, Brisbane, Perth, Adelaide, all sitting even tighter than that, and they have for a couple of years at this point. So very challenging conditions.
So what's the outlook then for rental vacancies for the next sort of 6 to 12 months?
Yeah, the unfortunate news for renters is there's probably not a lot of relief on the horizon. We're not seeing huge swathes of new properties coming to market. We're not building a lot of new properties at the moment either that would help improve the supply. So we're not going to see big changes in the near term. One of the things that is starting to change a bit from what we were seeing during the pandemic is we're starting to see people form share houses again.
Right.
One of the stories across the pandemic, and one of the reasons why rental markets got tight in 2021, was people broke up out of share houses. You go from 4 people in one house to those 4 people across 2 or 3 houses. That's changing now. And we can see on flatmates.com.au, which is part of REA Group, we're seeing our busiest year ever. So there are a lot of people looking for share houses at the moment.
And REA Governor, just quickly, she's flagged she believes rents are going to keep escalating for the next few months. So that's tough for renters as well.
Yeah, it certainly is. With rental markets as tight as they are, it's going to continue to be competitive. That's going to continue to put upward pressure on rents. That's also going to continue to put upward pressure on inflation. Rents are a big part of inflation. The RBA had forecasts out today showing that they think inflation's a bit more entrenched than they were previously flagging. That suggests there may well be more interest rates to come.
Angus Moore from REA Group, thanks so much for your time.
Pleasure. Thanks for having me, Ed.